Hey guys, this is Mark from TRADEPRO Academy, and in this video we're going to do a quick breakdown of the US midterm elections and their potential impact on the FX markets. So the current status quo of the US politics is that the Republican Party holds control of both the House of Representatives and the Senate. This essentially means that it's easier for them to pass through legislation. In this midterm election, all 435 seats in the House of Representatives, as well as 35 of the 100 seats in the US Senate, are up for grabs. The main impact in the midterm elections would be made by the Democrats winning back the House of Representatives or sweeping the midterm elections by winning both the House of Representatives and the Senate. Those are the two situations that will likely lead to the most volatility and repositioning in the markets, whereas a Republican victory would likely lead to the current status quo, i.e. pro-business policies, trade wars, as well as focus on border security, border protection, and healthcare. The current structure of U.S. Congress is that it is made up of two chambers. There's the House of Representatives, which is the lower chamber, and the U.S. Senate, which is the upper chamber. A bill needs to be passed through both chambers in the same form before becoming a law. Each chamber possesses different powers. The Senate possesses the power to approve and ratify treaties. They also have the power to confirm executive appointments, i.e. federal judges. And they also have the power to hold presidential impeachment trials. The House of Representatives, on the other hand, has a power of purse, i.e. passing through tax legislation. They also have the power to start impeachment proceedings of the president. There is three potential scenarios that can play out in these midterm elections. The first of which is that the Republicans keep the majority of House and Senate seats. This has a medium probability as per the polls in the mainstream media. This kind of scenario would lead to a more hardline immigration and trade policy enforcement with potential further tax cuts and fiscal spending on the way, which would see the US dollar enjoying considerable gains as pro-business policies bring strength into the US dollar. Now, if the Republicans add seats in both of the chambers, the US dollar could actually soar as impeachment is less likely with the Democrats not having any seats or any control of either the chambers. And with the majority in both of their chambers being Republican, it would be easier for them to pass legislation that was previously blocked. For example, faster deregulation. The second potential scenario is that the Democrats win the House majority, but that Republicans maintain control of the Senate. This is the most favored result as per the polls in the mainstream media, and this would result in Trump being limited by congressional deadlock. There would be a limited scope of new legislation going through, and an increased likelihood of a government shutdown, as well as potential calls for investigation on Trump's administration. This scenario would be negative for the US dollar, as a possibility of impeachment and government tariffs may cause uncertainty and volatility for it. In addition to this, the Democrats look to change any of the tariff policies implemented by Trump. This may weaken the dollar further. The third potential scenario is that the Democrats sweep the midterms and take control of the House and the Senate. This has a medium probability of happening as per the polls in the mainstream media, and this blue tsunami could lead to an all-out war in D.C. Democrats are set out to block Trump's agenda, and they may look to impeach him right away. This would lead to guaranteed legislative and administrative gridlock, potential overturning of tax reforms, and resolving trade wars. This would be the most negative scenario for the US dollar, as the possibility of impeachment and government shutdowns becomes much more likely, and this would lead to uncertainty and volatility for the US dollar. In addition to this, overturning Trump
tax reform may destabilize the US dollar. So what is the conclusion of all of this?
If the Republicans maintain control of both of the chambers, this will likely be positive for the US dollar. In this scenario, looking to qualify shorts against the majors becomes our best bet. If the Democrats win the House but Republicans maintain control of the Senate, this will likely be negative for the US dollar. This is the most likely scenario. The market's likely priced in the result, and any weakness in the dollar will likely be muted. The most volatile scenario would be if the Democrats sweep the midterms and regain control of Congress, as this will lead to substantial US weakness and can lead to a pullback back below the 92 level.
With that said, let's take a quick look at the charts to see the key levels of the US dollar coming into these midterm elections. Alright guys, so in front of us we have the chart of the US dollar here. This is a yearly chart, it's 12-month intervals, so each candlestick represents a full year's worth of price action. So you can see right now that the dollar is stuck within the range of the 2016 candle, the high sitting at 103.65 and the low sitting at 91.92. So with these midterm elections, you can see right now that price is sitting under the equilibrium of this range, which comes in at 97.80. With only 2 months left until the fiscal year end, the dollar can either push up above this equilibrium of 97.80 and attack the 103.65 range. This scenario is likely if we see the Republicans hold the majority in both the House and the Senate. However, if we see that the Democrats do sweep the midterms and regain control of both chambers, then we can see a potential move back down to these 2016 lows sitting down here at 91.92. On the weekly time frame here, you can see that the dollar consolidated the greater of March 2015 up until November of 2016, which was when Donald Trump was elected. So around this week here, you can see that the dollar finally pushed up over these range highs, up over $100, and posted a high here at 103.65. Shortly after posting the high, the dollar then came back down all the way to the bottom of this range here, took out the liquidity below this low, rallied a bit, and then we had another leg lower, which consolidated for several weeks around this 90 level before pushing price back up to the current level here at 97. This week, we've seen a rejection of 97 of that level, and going into the midterm elections, this equilibrium level here will be a key level on the US dollar moving forward for the latter 2 months of the year. And moving into next week with the midterm elections on Tuesday, the results will either cause the dollar to rally up into the upside of this range or sell off back to the bottom end of this range here at 92, and then a potential move back down into the 89 level before continuing lower. So the scenarios, as mentioned in the PowerPoint presentation, were a majority Republican victory in both the House and the Senate can see the dollar continue its gains and potentially push this upside range. Alternatively, if the Democrats do secure the House of Representatives, that result will likely be a little bit less volatile, as this is what the market is expecting and this is what the market has likely priced in. So any dips shouldn't be as volatile as if the Democrats swept the full midterm elections, as that kind of a result can lead to the dollar plummeting back down to these lows on the back of potential impeachments, potential government shutdowns, as well as potential overturning of the tax reforms that have given the US dollar gains thus far this year. Now that you know the key levels to look out for on the US dollar, you'll be better prepared to tackle these midterm elections and trade the FX markets. What you'll want to be looking for is trading the major crosses, i.e. the Euro US dollar, the Sterling US dollar CAD, Aussie US dollar, Kiwi US dollar, and even the US dollar Japanese yen. We'll be trading the midterm elections live in our trading room this week on Tuesday, so make sure to join us in the trading room. There's 14 days risk-free. You won't get that anywhere else in the markets. So until then, good luck and good trading.